It's 1 p.m. on the East Coast. I'm Guy Adami. That's the man in black, Dan Nathan. I was going to say Johnny Cash. I went to the Johnny Cash Museum in Nashville a couple years ago in the spring. Fascinating, but nobody's here for that.
Nope.
In just a few brief minutes, literally, Carter Braxton Worth of Worth Charting will be joining us. Today's market call is brought to you by our sponsors, CME Group, Dan, where risk meets opportunity. Of course, FactSet, financial data and analytics powered by Tomorrow. Before we get into it, on a rain-soaked MetLife field last night, as somebody predicted on the Twitter, you should go to Darren Rovell's account and check that out. Aaron Rodgers' season is over, and potentially, I hate to say it, but at his age, and Achilles is a devastating injury, so I wish no ill will. But on a night where Vinny Testaverde was back, one of the captains to do the coin flip before the game, the man who suffered the same injury in the first game of the season, I think it was 1999. They say lightning doesn't strike twice, Dan Nathan, in the same place. Well, apparently it did last night at the Meadowlands. How are you?
That was crazy. And a decent result for the Jets, despite
that.
Yes.
Let me ask you this question. I know you're not a huge Jet fan. You're a Bears of Chicago fan, if memory serves. But would you, as a Jet fan, would you rather them that got smoked last night and Aaron Rodgers come out of the game unscathed, or win the game and lose Rodgers for the season? I ask you that.
Yeah, I'd say the former there.
Exactly.
That's my 2 cents. And again, we hope Aaron Rodgers is okay. What a bummer, though, for New York sports fans, especially Jets fans. Guy, it's funny because today is Tuesday. This is a CME day where risk meets opportunity, as you like to say quite frequently. And it's good to be back because we did Market Call yesterday on Sirius XM Radio. We do that at noon on Mondays, and that's a lot of fun. But it's also fun to get our main man Carter back here, look at the charts. You know what I mean? This is a visual medium, and it works really well as we do it this way, Guy. Let's talk a little bit. I mean, the big story in the market today, and our friend Doug highlighted this, we already had this on our rundown, we're going to start with this, is like when money has moved out of tech, it is moving into energy, and it's been moving into financials. That's been the trade of this year, despite the massive outperformance of tech for the better part of this year. But to see a stock like Oracle that we talked about yesterday on Market Call on Sirius XM Business Channel 132 to be down 12.5%, Guy, in one fell swoop. This is a stock that was making a new all-time high briefly yesterday, or testing the prior all-time high, to break that uptrend that's been in place. You see that rising 150-day moving average, which is basically parallel to that uptrend, on high expectations and slower than expected cloud growth. I mean, come on, man. I mean, this has got to be something. This is, what do you like to say? Like, you want to footnote this here? You want to bookmark it?
I definitely do. Let me say this, and full disclosure, I have been bullish in Oracle for quite some time, and I actually thought there was a pretty good chance that the quarter would be good enough where the stock would continue that trajectory higher. That was wrong. But let's just sort of break it down for a second. The stock has had a ridiculous run. It's probably doubled since the fall of last year, right? So, I mean, that is, for a name like Oracle, those stocks don't move that way, number one. But number two, when you go through their release, I think it's north of 75% of their earnings now will be in businesses that have visibility, that have recurring profits, right? Recurring revenues.
Yep.
That visibility typically is associated with a higher multiple. The market rewards that kind of visibility. And at 18.5, 19 times next year's numbers, I don't think a market multiple is worthy. I think they should be higher than a market multiple. That's just me. So if you're paying through the nose for names like NVIDIA and a lot of these hopium stocks, which I get it, there is a pot of gold at the end of the rainbow. Oracle is telling you that they have that visibility, they have that recurring revenue. I think they should be rewarded for it. Obviously, today they're not.
Yeah, and it's interesting, the semis are acting okay today, but it's really cloud names, it's software names related to kind of AI that are kind of getting hit here. So I think that's interesting that semis are trading okay. If we look at the NASDAQ 100 futures, Guy, and we know that obviously, those top 6-7 names make up 45% of the weight of that. I mean, the thing is just still a monster. I mean, it's not even testing, on a day that you see a large component like Oracle down double digits 40%. This thing's not even like testing the uptrend. You know, it looks like it wants to party a little bit here. So again, I think it's interesting when you have high expectations, a stock like Oracle, and we know that Adobe reports later on in the week. So that is going to be a really interesting one. If the NASDAQ in general shrugs off up 40% on the year, the NASDAQ 100 shrugs off a reaction like this to a name like Oracle, you got to say to yourself, new highs are not so far in the offing, especially if this is kind of a one-off thing. So I don't know, thoughts there on
listen, very impressive. You're right. This uptrend's been intact the entire year since effectively January. I mean, and it's been, listen, we've only really tested the uptrend once or twice over the course of the last 8 or 9 months. And the higher we go, the farther we get away from the moving average. The moving average is just clearly sloping higher. There's no denying that. But to answer your question, and you said it's a monster, it reminds me of John Malkovich in a great movie, Rounders, when he yelled at Matt Damon, a monster hand, how do you throw that down? Sometimes if you think you have a monster hand, the market can beat you. And I think Matt Damon threw down a huge hand because John Malkovich had him beaten. He just knew it in his bones. I think right now we think we have this monster hand in the form of the NASDAQ, but I think the market's going to have us beat on the other end. I don't know what's going to be the catalyst for it personally, and we're going to get into it later in this show. I think it's going to come in the form of higher rates.
Well, first of all, you know, the monster, how did he know? He knew it from the
monster. Well, that's right.
Oh,
everybody's got to tell.
Sorry about the spoiler. Sorry,
you shouldn't do that because there are a lot of people that were going to go to Blockbuster this weekend and rent Rounders, and you screwed it up for them.
Yeah.
Anyway.
All right. Before we get to Carter, let's look at Apple really quickly because we know that their iPhone event is going on right now, and whether we think it's ridiculous or not. We talked a little bit about it yesterday. We talked about it on Fast Money. Your face was fairly priceless when I came to you and said the big innovation in the iPhone is going to be your favorite port, the USB-C port. I think you said, well, that is of course my favorite port.
Yeah. Well, hold on. We've never done this before on Market Call. So keep going for a second. I'm going to be right back because I'm going to show you something. Hold on. Don't move. I'm going to show you my favorite port.
Oh, he's going over to his liquor cabinet there, people. I think I know what's going on here. You know, it's funny when you look at this Apple chart, you could have drawn two different uptrends, the one that kind of tracked the performance all year until it broke down, or you could draw a little line to where it is right now, which is also that 200-day moving average or the 150-day moving average. There's Guy's favorite port.
The Taylor's 1977
wow
vintage port. That ain't no joke, people. So I mean, Apple can give you all the friggin' ports they want. So that's the port you want to buy. Sorry about that.
If these guys want to pull up a live chart on Apple, a 1 year on the fact set here, it'll be interesting if you want to just kind of do a different uptrend, the one that's very steep there, right? Let's draw that one. And to me, what's most important about that is if we draw that is that we broke it. Okay. And it was a violent break. Okay. And then we had that bounce back. We got towards that 150-day. We
filled in the gap.
Yeah.
And now here we go.
It did. And then it got rejected at the uptrend too. So if you can just kind of visualize that a little bit. So again, Guy, the fact that the stock is down 1.5%-ish or something like that heading into the event, I got to tell you, unless there's any big surprise, and I'd be really shocked. Look how good these guys are on these charts. They're
no joke. I don't know if that's Rafis or Jacob or AD.
I think we put a little pressure on. Oh, look at that. Look at that. I mean, and so, filled in that gap, rejected. So talk to me about your expectations here. Do you think that Apple could catch a head of steam here a little bit? Because if people are not wowed by the products that they introduce, then it goes back to the narrative that really knocked this stock down a week and a half ago, which is really Chinese, restrictions on the use of iPhones by government workers.
100%. Listen, are they going to wow people I have no idea. I mean, people, for whatever reason, Apple could come out with like a pocket protector, and they're Apple enthusiasts that would think it's the greatest pocket protector of all time. I just don't get it. But to answer your question, no, I don't think they're going to wow anybody. But the bigger story is what you just said, what's going on in China. And that was the first sort of salvo, the first sort of shot across the bow. But if you think that's the first and only, I think you're mistaken. I think there's more to come. We have been talking about the potential for this, by me incorrectly, for years, saying that if China really wants to sort of dig in, the poster child for that is going to be Apple. Well, they did it last week or week and a half or so ago, but I think there's more to come. On top of that, Dan, when Apple was a growth company a few years ago, It traded at a 12 multiple. It traded at basically a value company valuation. Now that it's a value company, it's trading at a growth valuation. It makes 0 sense. You have 3 quarters in a row of declining revenue and declining earnings. By the way, margins will contract as well. So I don't know what to tell you. It's an expensive stock. I know. Own it, don't trade it. I know all the bullshit that's out there, but the reality is this stock goes down as well.
Yeah, well, I think there's 2 gaps, one on earnings and one on the China news. And again, though, that's the 2 pillars of the bear case, is that ultimately, that their growth is going to slow. And then ultimately a growth area like China has the potential to really do some damage on them. And then the reshoring, this is going to be the first iPhone ever shipped on launch day from India. And those expenses are a lot, reorienting away from a supply chain they've spent 20 years building and a consumer that they've really relied on to gobble up their phones. And I think it's important to note that they're only number 4 in market share in smartphones in China, although they've had tremendous growth. They've doubled their market share, from like 10 to 20% or so, as far as the revenues have doubled over the last few years or so, from a growth rate perspective. So it has been growing pretty good, but this could be the shot across the bow that you
listen, and Mel said it last night, and we've talked about it. That's government workers, however many there are. I don't know, whatever number is 40 million, whatever. But if they were then to say, shadow ban it from the government for all Chinese citizens, I mean, you're right, they're 4th, but that's still a tremendous number. And if that were to happen, you don't think that's devastating or catastrophic for the stock? I mean, think again. And if China wants to start moving these levers, they can absolutely do that to a certain extent with impunity, because who's going to push back on them? Are we going to push back on them? We've sent 4 people out there now over the last year or so. Janet Yellen, Kerry, Gina Raimondo, and what's his name? Blinken. You think that's worked? I mean, yeah, each person has come back and said things are getting better. Each time when they come back, China does something else to sort of escalate the rhetoric. It's not getting any better. And I'm not trying to be doom and gloom. You just got to pay attention here.
Yeah, no doubt about it. The cheapest thing you can do, guys. You like
pay
to
attention.
All right, let's do this thing. Let's bring Carter Braxton Worth of Worth Charting in here. Carter, thank you for being patient, my main man. How are you?
How are you? Good. Rounders. What a movie, huh? And
great movie. Great movie.
Matt Damon, but it was Ed Norton and Malkovich, and my favorite, because that guy John Turturro, who played Joey Nish, right? He was like the voice of reason. He was always telling, it's not about how much you win, it's how much you take home at the end of. But the best part, of course, he was in trouble, Matt Damon, right? And he was in real trouble. And he's asking for money. And he was like, what's $2 grand going to buy you a day? No, I'm not giving it to you. I'm going to waste it if I give it to you.
See, Carter knows the movie. That's fantastic.
Carter knows the movie here. Carter, what putting all the fundamentals aside in the Apple, and maybe these guys could bring the chart back up. And I remember into the print a month and a half ago, you were short of this thing. You thought that it did have the potential for a breakdown after such a steady 45-degree angle, that increase that gained, hundreds of billions of dollars in market, over $1 trillion from those lows, right? So now you have 2 bad breaks here, man. Like, what is your take on this thing right here?
Yeah, I mean, if you just, as described by you just now, an unrelenting, impressive, increasingly, not necessarily steep because the rate of ascent didn't change, but increasingly complacent ascent, right? Where almost no dips, drawdowns, and then a break. The key here, and it's the only thing that matters, is to not look at it as Apple. You have to suspend what you know about Apple, about the Apple phone in your pocket, the thing on your wrist. If it were just a chart, one could say, but I can't, it's Apple. That's what's key. Forgetting you didn't know if there's a small cap stock, a mid cap utility, and you saw that kind of price action. Then what could one say other than a pretty incredible run up where something has come along that now calls into question that move? That's what a drop in gap is. It's almost always news related. And then you get the second. And one would say, I've got to go and buy this here without knowing anything. If you didn't, it's the thing that makes you want to buy it, or anyone. Oh, it's Apple. Apple always comes back. I've got to do it. But if it just is a chart, there's no premise, no thesis to buy something that has just had an ascent like that, a first shoe to drop, a second shoe to drop. And if one didn't know what they were, one would never step in. One can excuse it. Oh, China's not going to get that bad. Oh, this will be. Don't excuse it. It's a problem. It's a broken chart.
Yeah. All right. Let's do this because I think this is a good segue here because we know that Apple is obviously the largest equity on the planet here, and it's a huge percentage of the S&P 500. You had a great note out on worthcharting.com yesterday. And first it was just basically no lines, no annotations. You were putting out, I guess you've done this poll now for 17 years. I know I participated in it for a very, very long time. It's a choose your own adventure. Describe to us a little bit about why you do this and some of the things that you've taken away from it over the years, because you have all sorts of investors participate, largely big ones, right? A lot of your institutional clients, and that was the predominantly one. But I'm sure now, because you have, worthcharting.com, you're getting a lot of other participants who are equally smart as some of the pros here. But now you have some new participants in this poll.
Right. So just over the years, obviously, I would say every single mutual fund company that you can think of, every long, short hedge fund player, every family office, endowment, pension plan has participated in some level, meaning whether it's a desk analyst or a CIO or an economist or a PM or an analyst. And that continues to be the case. We have participation from around the world and from all types. But just a couple things about it. Wall Street has a convention of, they call it price target. What's your price target? What's one price target for the market at the end of the year? Now, that's absurd, right? It's absurd. It's where the market closed at 4 p.m. on the last trading day of the year is absurd. It's also too far to know. Who in the heck knows where we'll be? Now, what's important, though, is once you've gone a certain way, right? Now it's like betting on a horse race when you're entering the final turn, or in a baseball game in the 8th inning. Now it gets interesting because you can either extrapolate what's going on, that horse that's leading is going to win, or we know what happens in those final lengths, they're upsets. And so when the end is in sight, right, no one can give you a price target for the market a year out or a stock. It's absurd. But once you're within shooting distance, and we do this after Labor Day, first week or second week, it's choose your own adventure. And it's not so much where the market ends, which is important, but the path traveled. That's the part where, is it now a seasonal weakness in September and more in October, and then we ricochet? Or do we have no seasonal weakness and we just rip all the way into year end? Or do we, and we'll look at the scenarios, or are we really strong and then we have a Christmas dip because people take profits anticipating recession? And we'll toggle through these quickly. This is the chart, they're weekly bars as presented every year at this time. And then we add scenarios, and we've done 5. So let's look at this one and do the second. If we just do, let's toggle first, second. So that's the market as it is. That's one scenario. I'm going to toggle quickly. Take it off, put it back, put it on, put it. So that's the market. And that's one scenario. Guess what? A lot of people pick this. This is essentially, we don't have a lot of trouble, maybe a little dip in October. We make it to the end of the year, almost back to the high. And you can see there, that would be a 26.6% return for the year, dividends included. The second scenario is this, very similar. Let's look at number 1 and number 2. So what's the difference? This one, the one preceding, let's toggle. The one preceding, number 1 and number 2. Yeah, that one. That was good. Perfect. So what's the difference between these two if we toggle? Well, the difference is that this one has a dip actually in December. So we're strong now. We almost make it to the highs. And then people are like, wait a minute, 2024, and you get profit taking in December. A lot of people say that's not possible. You always get a rally in December. You don't always get a rally. This was also popular. The next one is the yawn scenario. We kind of just grind, neither improving nor deteriorating into year end. The third and the fourth and fifth, this is real weakness coming up here the rest of September, October, and then a year end rally that gets us back. And the final is that. So for fun, let's go to the top, start with the S&P, and then with no lines, and let's do 1, 2, 3, 4, 5. And so if you look at the S&P as it stands, 1, 2, 3, 4, 5. Now, is that the last one, of course? Are those the only scenarios? No, that's what my eye sees. There could be 50, not 5. But the point is, this is a way of teasing out people's thinking as we get to the home stretch. And I would tell you this: the votes coming back at about 400 so far are almost equally dispersed. There are a lot of people that have voted for 2, and a lot of people have voted for 4. Not that many have voted for this worst case scenario.
Guy, what do you think here, bud? Carter's going to take us through his charts. We don't want to skew the results too much, but he brought a bunch of S&P 500 charts. What are you voting here on your choose your own adventure?
Well, I got to stay consistent, so it would be Odyssey number 5 without question. But you look through them and you look at the charts, and you can make a pretty compelling case for each one. But through my lens, and I look at what's going on here, and for me, Odyssey number 5 makes the most sense given all the things we've been talking about, and given the setup. And with 16 weeks, I guess that's what's left in the year. You really, I just don't know where the good news is going to come from to get us to accelerate higher from here, Dan.
Yeah. All right, Carter, walk us through the S&P 500 charts, the futures here.
Sure, the futures. Yeah. I mean, look, there's so many draw the lines. Of course, the lines are judgments, just as people come to fundamental judgments. But let's draw the lines. This is just going back to the March low. There are no lines. This is one way to put the lines in. So let's do it. Take it away, put it back, take it away, put it back. Let's do the next one. There's another way. There's another way. We've broken trend. There's another way. So let's put them with arrows, which I think is ultimately. So I think this standoff here, this very minor formation, we're going to get resolved to the downside. Let's leave that arrow and put the next iteration. Now we're not near that uptrend line, but that's what I think is coming. Let's do the next one. If you draw the trend line this way, where we broke trend, we rallied back to it, and then we hit our head. Next iteration will be, of course, the head and shoulders that is so well observed and a bit defective at this point, but still in play. And put them all together, or many of them together, and we have this. Look, a lot of people are calling for new highs. That's one of the scenarios offered in Choose Your Own Adventure. My hunch is otherwise.
Yeah, well, it's interesting that you said you've seen a pretty even distribution across all those channels, because when I look at your charting here, I see a head and shoulders, I see a break of a long-term uptrend, I see a little pennant forming that looks like it wants to break. I see a lot of technical stuff that doesn't look particularly great in the S&P 500 futures. Well, listen, Carter, we really appreciate you coming here, taking the time, laying out your Choose Your Own Adventure. I hope when we get all the results in, we can kind of get a better read on how many folks voted for what. So we appreciate you joining us today. Thanks.
All right. Bye.
I love Carter Worth. I mean, the fact that he can rattle off all that stuff from Rounders it doesn't surprise me, by the way. So anyway.
No, it doesn't. So, Guy, when we think about the things that could cause a break lower, and this is what we're going to spend the rest of the show talking about a little bit. It's kind of interesting, right? So we have this Fed meeting next week. The CME Fed Watch tool is pricing in less than an 8% probability of a 25 basis point hike. You spoke with Liz Young on the Tape podcast Sunday night that dropped yesterday. She was saying that, listen, could the Fed surprise people here? Maybe they don't surprise at next week's meeting, but maybe they hint to one more rate increase or so. I think you're on the record saying you don't think that's going to do a whole heck of a lot, but surprises when it comes to Fed policy definitely have the ability to kind of move equity markets one way or another. When we're looking at yields, let's throw up this 10-year chart. Okay. So we see the resistance. We see the kind of, the pattern forming here at this 4.25-ish sort of level in the 10-year yield. You see that nice uptrend that's also kind of been in place here. Would a breakout, in your opinion, of the 10-year yield, would it cause some volatility in the equity market, maybe leading to some of those arrows that Carter's mapping out there?
So the binary, just the short answer is yes, it would. The higher yields here, they're not a good thing. 10-year yields historically, yields going higher suggests the economy's getting better. We're reaccelerating in the economy. Things are looking up. 10-year yields now are going higher because investors need to be paid more to take the risks associated with owning bonds. One, supply demand stuff, and two, there's this reacceleration of inflation. We'll talk about energy in a second, but it's clear to see. I think CPI is going to start to turn the other way. It's been trending lower now for 15 or so months. Thank God. But I think the easy part is now over. I think we're going to start to see it higher. And whether or not the Fed does anything at their meeting, I don't even know if it matters. If they were to hike by 25 basis points, and to your point, I think there's like a 6.8% chance, according to the CME watch tool, that they will do that. But if they were to do that, that would spook the market, because I think the narrative would be, hey, this is still a problem. I don't think they're going to do anything. I think the language is going to pretty much stay the same. But, the die has been cast in terms of what they've done, and just follow the bond market. Yields are going higher, and I think that's going to be problematic.
Yeah, well, you just mentioned energy, and when you look at this kind of this headline this morning on Bloomberg, yeah, OPEC oil data shows
Who is this Brian Harris guy, by the way? I challenge to recite one positive thing guy says the entire show.
All right, but you know
Here,
what?
I'm positive about this. You're an asshole. That's what I'm
All
positive
right,
about.
all
I'm
right.
positive about a lot of things. You know, we are positive about certain. We've been very positive about healthcare, very positive about energy. I'm not positive about the broader market. Anyway, back to you.
All right. So you've been positive about oil too here and the price of it and this spike here. And we have oil futures getting near that $90 level. So, obviously talk about OPEC oil data showing 3 million barrel shortfall on Saudi supply squeeze. We talked a little bit about those supply cuts a couple weeks ago here. I mean, this is one of the things that obviously have the potential, to kind of keep rates higher for longer. And then on the flip side of it is obviously, what's gone on with the US dollar here. I mean, it's been a very steady rise since falling off the bottom of the chart just a couple months ago here. And we're approaching, a technical level at this kind of 105 level. That was the high from May, June or so. And then on the opposite side of that guy is gold, and so gold is kind of tracking, this downtrend from those May highs here, a series of lower highs. It has not made a new low. If it's interesting, that July low. So when we got back down and we had that sell off in the summer in August, wasn't a new low in gold. It looks like this thing is also, the tension is building in the gold futures, and we could have drawn an up trend from last fall, and you would have seen a little bit of a flag or a pennant formation forming there in the gold if they want to bring that one up here really quickly.
So let's just talk about these things in order. I mean, that's gold. Gold's been hanging in there, but let's go back to the dollar right now. So it's interesting. The ECB has a huge problem, right? The ECB has been raising rates, and they've been raising rates in the face of an economy that's clearly been deteriorating. But the reason they've been raising rates is because inflation is such a big problem. It appears as though they're going to stop that. If they were to stop that, that would be dollar bullish. There have been scenarios, by the way, where not only the U.S. dollar rallies, but commodities, underlying commodities rally. Now, I understand a stronger dollar is a headwind. It doesn't mean it's going to stop commodities entirely. So there's a scenario here where rates go higher, the dollar goes higher, which we're seeing both of those things, and commodities go higher, specifically crude oil. And I think that's what we're looking at right now. Now, I'm hard pressed, in my opinion, to understand how in any way, shape, or form that's bullish for the economy and or the equity market. But there are people out there that say that it is. But if those three things were to happen, if the dollar were to continue to go higher here, if rates were to continue to go higher here, that's going to be a problem for the equity market at some point. And then, quite frankly, I think the Fed understands that, but I think they're hard pressed to combat it at this point.
Yeah, no, it feels that way. And hey, before we get out of here, guy, we got to bring up this CME battle of the bonds.
I love this battle of the bonds.
It's actually been a ton of fun here. We got a lot of stuff going on. And there's my, and I'm down, guy. I've been trading a little bit here. I've been trading the 10-year treasuries. I've been buying treasuries, making the opposite bet I think that you've been making. So I think yields probably fail here. Okay. You're on the other side of this. This is what this looks like on the Futures Challenge leaderboard here. I'm not doing so great here, guy, but I'm gonna try to dig my way out of this hole a little bit. But it's actually a really cool look at all this. Tons of educational stuff here. There's tons of stuff to rip through this. These are all the products that you can trade here. You can just scroll across it. The 2-year note, treasury note, the 5-year, the 10-year. There's also the ultras here. You can do calculators as far as implying, or figuring out how much margin you need to trade this. So this has been a lot of fun. Danny's been pretty active in doing it. You've been doing it here, guys. So you can see all the trades that you've done, and you can look at the leaderboard and you can see who else is up there. So a lot of fun. So let's keep talking about it this week. Let's keep trading these things and let's participate in this. So, Guy, thoughts here as we take this thing out here. I mean, again, Carter's charting the S&P futures lower. You think they go lower. I also think they go lower. But the flip side of this, what we started out in a day where Oracle is down 12%, the NASDAQ 100 futures act okay here. And that chart looks very different to me than the S&P 500 futures.
Look, while we've been on, I mean, the S&P's probably rallied 15 or so handles, only down a couple now on the day. I'm not really sure what happened because I've been chatting with you. I'm sure it was something earth-shattering. But in terms of CME, real quick, it's a free education, right? Just sign up and do it, and you get a free education on how to trade futures. It's invaluable, I think, and we've enjoyed it. And I know the people that have signed up have enjoyed it, and I'm sure CME will do another something like this, maybe hopefully again this year, but obviously next year. So we'll stay on top of that. But again, it's a great way to sort of understand how the market trades and sort of structure and stuff. And in terms of the market, stay tuned, people. The CPI number is going to be important. And again, pay attention to what's going on. Obviously, with China, the rhetoric out of China, and with what's going on with dollar yen, because you saw that jawboning that we thought you would see in terms of trying to support the yen. We'll see how long that lasts. I don't think it'll last that long, Dan.
All right, man. Well, we did it today. Thank you. Thank you to Carter Braxton Worth of Worth Charting. Thanks to our fine sponsor, the CME Group, where risk meets opportunity. And of course, FactSet, financial data and analytics powered by Tomorrow Guy. You're powered a bit today by the CME Battle of the Bonds. This is kind of fun. So let's keep trading these things up this week, and we'll keep updating it on the Market Call. Thanks so much for being here, everybody, and see you tomorrow.